First of all, the Fed's likely to sit tight, at least for the time being, in fact, probably through the end of the year. But second, I think everybody watches Fed has to somewhat shift gears. Up until early this year, they were telling us exactly what they were going to do, which was essentially nothing except keep interest rates low. They've now shifted back to more the old days. They really are watching the data. And if you think back over the last few months, there was a period when they were dropping hints about June. Those have all gone because indeed the data a little less encouraging, a little less exciting now. Yes, it's opaque, but I think if you dig down a little bit, the U.S. economy is okay. It's not going to be fantastic numbers for the next year and a half, but we're safe from recession. And at some point, no sooner than late this year, probably next year, we will see interest rates tick up a tiny bit.
Yes, on and off, on and off. It's very interesting in Greece, but I think end of the road is still a bankruptcy for Greece. We need a haircut to set this sort of stalemate free. Whether it becomes a Grexit is a different story, but I think they're just playing for time. If you can get out of a situation like the Greek one by two ways, by defaulting, which I think will happen in the bankruptcy case, or you can grow yourself out of it. There is no shape or form that Greece is willing, able, and can enact a program that's going to set the motion forward in terms of growth. So, you know, the beauty of my argument is that I may not be right this year, but ultimately Greece will have to do a default because the burden on the economy, the burden on the corporation in Greece is so large that it's impossible to sustain without.
I think it's mainly excitement about future easing. But it's also the sentiment itself, you know, it feeds on itself as well. In China, it's mainly the retail investors that have been buying, and they get more excited as the market rises more. So it's also a bit of that. But I think the key to it is the expectations of policy easing. Well, we should not forget that last year around this time, China, together with Russia, was the cheapest market in emerging markets. So the market, of course, has been very strong, and valuations are not that attractive anymore. But I think you cannot say yet that the market as a whole is getting too expensive. So of course there are some stocks, some sectors that might get a bit expensive, but overall I think value is not the big concern. Yeah. I think the big concern for the Chinese market is really the supply of new equities. If the authorities really start to sell more companies to the private sector, there might be suddenly a feeling that there's a lot of supply coming, and then the market might correct.